The S&P 500 for this year is very much similar to the global financial crisis back in 2008. So I covered this in session 38, so you can definitely go back and check it out. So if you've already forgotten. So here is just a summary. So when I share this, S&P 500 is somewhere around 4,300 or 4,200. So it's just somewhere around here. We just break down from this little distribution that's back in about end of the December last year, and then subsequently form a range. And by the time it's just about to break, and I just show you this analog back in 2008. So at that point, I think this is a bit kind of different because here is very well-established trading range, but this is a very short trading range. So I think this is the only difference. And after we get through this distribution structure, we got this sign of weakness. So you can definitely see that there's also sign of weakness right there. So after that, I just kind of foresee that, well, we're probably going to been through the last part of the supply, similar to the 2008, and eventually just break down and go into the capitulation mode. However, it didn't really went into the capitulation mode. In fact, it just kind of have another breakdown and then bouncing up and then from another range, which is the range that we're currently in. So that brings me to next slide. So just now we are somewhere around here. So that is about 4,300. So after it actually break down, so here we go. So breakdown and then coming back with a test of the axis line, and then eventually just have another sign of weakness, a minor sign of weakness, and eventually just define this trading range. So this is the current trading range that S&P 500 is testing. So now let's just revisit this chart again, because it's actually the same chart back in 2008, same as the previous slide. However, there is something different, because just now, the slides previously that I shared with you, we see that this sort of the breakdown did not really trigger a capitulation like the one we saw in 2008. In fact, it's just kind of going to typical mood like breakdown, well, go through, well, maybe 1-to-1 projection, and then eventually coming back, have a test, and eventually makes another trading range. So this is the thing that is kind of different, because previously I thought that we'll just see the capitulation mode back in probably May, when once it's actually broken down, then it should really collapse like that, similar to 2008, but it didn't. In fact, it just create another trading range. So right now, we are here again. So here is the structure. So if you take a look at the number, I just labeled the 1, 2, and 3, pretty much just correspond to here, 1, 2, and 3. So the only difference is the duration. So the duration is definitely different this time. So if you look at 2008, so that's definitely after the breakdown, we got a selling climax, automatic rally, secondary test, and then eventually we got a kind of laborious rally. So in terms of this rally, if we compare to this year's rally here, this portion, I would say that this rally is quite strong. It's very strong, very vibrant, unlike this laborious movement. So it's sort of like grinding up, but eventually we do get upthrust in both cases. So here is upthrust, so temporary commitment above, and in 2008 we also got a upthrust, or in this case I call it an upthrust after distribution, because right after that we see that this is a sign of weakness. I label as 1. So what about here? This is also a sign of weakness, because this is definitely the worst or the strongest down wave if compared to this one. So this is again the same. So, and also if you look at this, here is the undercut. So it's just kind of temporary commitment below. So it's sort of forming, maybe we can call it a spring, or we can call it maybe a sign of weakness. So to be confirmed. So it could be a sign of weakness, or currently you can treat it as a spring. So it doesn't really matter, because right now it's still testing and it's still unfolding. So if we think about this, 2008, right after it just break below, what happened next? We got a good rally. So a rally. So that's kind of mimic this rally number 2. Okay. So, but in terms of the rally, this is the current, the 2008 rally. We got a up wave and then a test and then laborious movement, sort of forming a trading range. So there's a trading range at 2. But in terms of right now, we got a rally. And what about the test? The test is almost like 100%. So it's forming like a, maybe you call it a double bottom. So the test in 2008 is a lot better. So rally, test of maybe 60%, and then eventually just grind up until it's forming a topping formation, like a routing top. So routing top, breakdown, test, and after that, we get a breakdown here. So at the moment, is this the breakdown? I mean the CPI bar, the bar that reacting to the CPI. So it's just a temporary commitment and then eventually just quickly reverse. So here we got kind of similar situation. Maybe let me bring you the trading view chart. Is bigger. So let me bring you this. Okay. All right. So yeah, this is better. It's bigger. So this is the breakdown. So the breakdown, and then after that we got two of the very strong bars rally. So two very strong bullish momentum bar. So this is kind of a bit different. So breakdown and then rally up. But look at the test. The test is maybe around 60%. But here, very strong rally. But look at the test. The test is not really a very mild test. It's like go all the way back to test the low, and in fact, it just undercut the low. So in terms of the test, this is weaker. So this year is weaker. So 2008 is stronger. So in terms of this rally, and it just spend more time above this trading range. And subsequently, when it's actually break down, so this is a breakdown. So look at how the price characteristics when it's actually breaking down. So we see that there is a spike of the volume, increasing of the volume. And after that, we got this bar, this bullish bar, which comes with really high volume. So that's very similar to the bar that reacting the CPI. Okay, very high volume and very decent spread. So in fact, this is probably a very wide spread bar. So very similar to this bar. And after that, we got a test, like just one bar test. This is a bar that tested the previous high. One bar test, and then followed by rejection, and eventually just go down, inability to rally. And then when you actually break down on this bearish bar, that's the final confirmation is going down. So right now, we got this kind of key reversal bar, or the bullish and engulfing bar, whichever you want to call it, with spike of the volume, and subsequently, we didn't get a follow through. In fact, this is almost wiping out all gain in the bar here, the bar that reacting to CPI. So that certainly doesn't look good at all. So this two bar comes with a lot of the volatility and ton of the volume as well. But yesterday, kind of changed everything, reverse again. So there's a lot of the volatility involved right now. So it's happening, and you can see that today is during the Globex hours, the non-regular trading hours, European London session, Asian session, it just rally up. So 1.8%. So it's very strong rally, very good rally. So it's still want to test the previous high at 2 here. So this is 2, so this is the high. So that is the key moment when it's testing. So we want to see how we actually interact at this level, which is a 3800 level. It's the same message that I told you like last Tuesday and also the week before. 3800 level is a very key level that you need to overcome. So first, we already see that we got some form of the rejection. Price just stalled at 3800 and then have a very deep reaction. Right now, price is coming up again, very similar to 2008, coming up again. And if we see that it's going to have a reaction and then eventually going down, and the ultimate confirmation will be a break below the CPI bar's low. So a break below the low of this bar will get a confirmation that is going down, and I think it's very likely to trigger a capitulation. Means that, how does the capitulation look like? So first, you will definitely see that there's a acceleration to the downside like this. So this is a acceleration to the downside. Definitely this is a selling climax, increasing of the supply, big spread bar like this. So all sort of the price characteristics that we could anticipate when we see the capitulation. Means that if it breaks below, then that is the situation similar to this that I will anticipate for this year. However, at the moment, we still couldn't just conclude that, well, it's going to break down and then to test maybe 34 or 3200. So Stan say any level if a capitulation happen for this year? Yeah, sure. I think we kind of sort of finish this analog. Maybe let me just jump straight into the other chart. Let's just go straight into the S&P 500 and let's analyze that. So we'll just go through what happened last week and what's potentially going to happen this week, and also for bearish case, if it triggered the capitulation, what level can we expect, and is there any bullish case? All right, so let's go through this. So this is S&P 500. So what happened last week? Last week we were, where is it last week? I think this is 11. Yeah, last week we were here. So this is last week bar. I talk about that there's nothing to be bullish about in terms of the price action, but in terms of the sentiment and in terms of the market breadth, we definitely can expect some sort of the rebound from oversold level, because we definitely got the bullish divergence from the market breadth, and in terms of the trust is getting shorter and shorter. But all of this just don't matter until we see the bulls commitment. So where's commitment? Here's the commitment. So right after the nasty CPI data coming out, we definitely get this very deep spring into about 3,500 level, and then eventually just close at a high. So this is by far, I think it's very, very meaningful because first, look at the spread. This is by far, I think, the largest spread that we have ever seen. So to the upside, I mean, to the upside, not consider this, like this is to the downside, but I mean to the upside. So in terms, if you consider the intraday movement to the downside and then eventually just going up, so this is very, very significant. And look at the volume. Look at the spike of this volume. So this is very meaningful. And look at where it actually happened. It happened right at the low. It's a spring. It's an attempt to spring because it's still unfolding. We can't really conclude that, well, it's definitely a spring. If it is a spring, we definitely want to see it actually going to rally up and then take out this previous high and then followed by back up, eventually just going up. So that is a successful spring. But right now, what happened? So right now, we definitely get an attempt to spring, and that is a very good sign. But what happened next day? Next day is totally disaster. So it just kind of wipe out all again. So this bar really comes with a lot of the volume. So a lot of the volume right here, and look at the close, look at the spread, is very bearish. So instead of having another follow through day, so it means that after this key reversal bar, for bullish case, we definitely want to see some kind of the follow through to the upside or even higher. So going up to test at least 3,800. But this really doesn't look good at all. But yesterday, it sort of reversed itself. So very volatile. So whether you are long or short, if you just put your stop close enough, then likely you get stop out. So this is really the hardest spot to trade because of the volatility. The volatility will just kill both sides. So whether you're long, whether you're short, your stop will likely to get taken out with this kind of the volatility. So like Amazon just dropped 5% and the next day just up 5%. So this sort of the volatility doesn't really good for any swing trading. But if you're day trading, then there's another story. So right now, I still think that we are in an upswing. So up from here. So because yesterday really saved the day, and today is quite important because at the moment is testing one of the axis line. If we go to the hourly time frame, so here's hourly time frame. This is axis line. Okay, so this is where the breakdown happened. So it's one of the very important area. So this is area need to get tested. So we need to definitely first see S&P 500 can actually come in above. So coming above and then eventually could push up to 3,800, which is the ultimate or the very immediate target. So when we see that, we definitely want to see a very shallow type of reaction, if there's any. And after that, it could really push up the price. So in that case, there's still hope to carry on the rally then until probably, I would say, like this level. This is another key area. The level is about 3,900, which is, I think this bar is the Fed bar, the rate hike bar, if I'm not wrong. So ultimately, it needs to get tested, and hopefully it could really have a shallow type of reaction. So that is still the upswing. So of course, that's really a big if we can go above this axis line and then eventually 3,800. So this is the level that S&P 500 need to just come in above and really penetrate through. So that is really still like the upswing, a bullish case. But what about the bearish case? The bearish case is definitely we fail right here. So like somewhere around 3760 and then test the axis line and then you reverse and then going down, then you can refer back to the 2000 analog that I just showed you, or probably could just test the 3,800 upthrust and then eventually coming down. So the final confirmation will definitely like maybe coming down, have some form of the rally or very weak rally and eventually just go down, weak rally, go down until you just break below 3,500 and then you just drop. So Stan say any level, okay, yeah, sure, we'll just talk about the level. Dave say by then wait for strength, showing it maybe too late. Once hit 3,900 may not cross. Yeah, absolutely, because at the moment if you're waiting for 3,800, likely that is the place where a lot of the shorties will just place the short, including me. If it show reversal, then I'll just short the futures or buy some put. So definitely this is a very good spot to go short, 3,800, or even if it can reverse right at the spot at the hourly time frame that I just show you, like this 3740 to 3760 or 70. So in case like if it show this kind of the movement, like right now we definitely see that it's reacting, but how's the reaction look like? Quite shallow, and it's just bounced back by this axis line. So far it's looking not too bad. But if in case it shows some kind of the upthrust reversal, then the first level is axis line here. So if it breaks below by 3720 breakdown, then likely this is another good spot to go short. At least it will just go down. So this is how I see that. So yeah, Dave. Yeah, by the time it reach like 300, is might be too late. Because it's just a natural spot for it to have a reaction. Even if it didn't really want to go down, it sure will have a reaction, something like this. So you can see that this is a key level. Once it hit the level, a reaction. Although it's a shallow one, but still there's a reaction. So if there's a very bullish movement tonight, and it just go up and it just hit 3800, then this is another spot to have a reaction. It's just a natural spot to have a reaction. So whether it will turn into another big movement down, we don't know yet, but it's definitely a spot that a lot of the people will bet on the short side, to bet on the put warrant, put option, to buy the futures. So that is definitely a very strong resistance, and a lot of people will be looking there. So back to Stan's question, like the level. So in case we see a capitulation, means that maybe it could just turn down from here, or maybe go up to test 3800, reverse, and then come down, and then break below the 3500 level, and then very similar to the 2008 analog. Then what could happen? So first is definitely the channel. So if I use this, I think you can see that there's an oversold. So it's really easy to just go down from here, and not only here, because if we want to see a capitulation, it's definitely need to get oversold and overthrow as well, not just touching the trend line. It would just need to go way above and beyond, maybe 3200, and then we could see some form of a rebound. So if we look at the previous support, so where is 3200 or 3400? So this is a previous accumulation range. So this is 3200. In the middle of the range is 3400. So the upper part here is 3600. So is 3400 is pretty much like a given, and we need to see it really like oversold until maybe 3200, and then we could really see like, well, everyone's screaming the sky's falling, sell in climax. Then what's next? That could be there, automatic rally, and then from there, this is like, well, another rally, a rally in a bear market. So it could be very fierce. And because it's super oversold, deeply oversold, and a lot of the value just manifested, and from there it could become another trading range. Then we need to judge, well, whether this is a redistribution or accumulation. So that is another story. If you want to catch my latest videos, click on the subscribe button and the bell right now so that you get instant notification once I upload my latest video. If you want to check out my online courses, go to tradeprecise.com to find out how to profit consistently from any market without using complex indicator or understanding any financial statement, no matter you are trading or investing.